China's employment centers are overflowing beyond capacity. They're organizing job fairs outdoors to cope with the high number of job seekers, but there just isn't enough work for everyone. Hurt by weaker domestic and international demand, the economy grew 6.6% last year, its slowest pace in 28 years. Now the government's slashing value-added tax rates for selected industries and rolling out incentives for others.
We are cutting taxes and lowering fees for small businesses. Our priority areas are job creation, poverty alleviation, and reducing pollution. On the supply side, we will cut overcapacity and focus on the development of rural areas.
This latest round of tax cuts follows the lowering of income taxes for some workers last year. This time, the tax breaks are much more significant. Investment bank JP Morgan says they'll pump $300 billion into the economy. That's in addition to $2.4 trillion in loans issued by Chinese banks last year after the central bank eased lending rules. And it's introducing more reforms to open up the country's financial sector to foreign investors.
We will ensure there's enough liquidity in the market, we'll introduce more targeted regulations, and make our interest and exchange rates market-based.
But analysts say it will take months for this money to move through the financial system, and most will likely be loaned to the government and state-owned enterprises, not small businesses. This stimulus package is only a fraction of the $600 billion doled out by the government after the 2008 financial crisis. And despite the spending spree, if global demand stays weak, China may not be able to avoid a recession. Mobin Nasir, TRT World.
Let's get more on this now from Martin Jacques, who joins us from London. He's the author of When China Rules the World. Welcome back to the program, Martin. It seems like we're getting dismal news out of China every day now, and there's even talk of Beijing possibly revising down its growth outlook for 2019. Just how bad is the slowdown in China?
Well, I think it's probably the most marked slowdown we've had for quite a long time now, and I think it's going to be quite a challenge to the authorities to carry on reducing the various problems of debt, while at the same time keeping a reasonable growth rate. And obviously, these latest measures of VAT on personal income tax and so on are designed to do this. Whether there'll be enough, we'll see. If they're not, then I'm sure the Chinese will bring in some further measures. I think they're very determined to deal with the situation. I mean, one of the problems, of course, is that the global economy, the growth rate of the global economy at the same time is declining, and the projections are also declining, and China is still very dependent on exports. So that's a further difficult element in all this.
Yeah, so you touched on other possible measures in addition to the tax cuts and the cutting of the amount of money that banks need to hold in reserve. What are these other measures? Are they a cut to interest rates, for example?
Well, I suppose that could be a possibility. I think further measures to stimulate consumption along the lines they've done, but more strongly is also something they can do. I mean, China's consumption as a proportion of gross domestic product has increased significantly over the last few years, and I think the Chinese will be very anxious to keep that process going.
Yes, and we also know that China's grappling with this trade war with the United States, but we also know that the slowdown in China was happening even before Donald Trump launched this trade war. So how much of a factor are these tariffs in China's current economic situation?
Well, I think you're right. I think that China's slowdown started before, really, the trade war or the effects of the trade war began to bite. So I don't think they're the primary reason. But of course, they are a factor which, depending on the outcome of the present talks, could become a more serious consideration. And furthermore, of course, fears about the trade war are affecting global prospects. And that is one of the reasons for the decline in the projections for global growth in 2019.
And we also know that as the world's second largest economy, China's economy is crucial to other countries as well. The saying that when China catches a cold, when China sneezes, the rest of the world catches a cold. I mean, is that still going to be relevant going into the future?
Oh, very much. Not just relevant. I mean, China has, since around the turn of the century, and especially since the financial crisis, been the major source of global growth. I mean, it's been responsible for 30% of global growth. And the Chinese market, as the Chinese consumption increases, the market for other goods, for example, Apple's results recently, which were not such good results, and one of the key factors for this was China. So what's happening is China is becoming a very important, and I think probably soon, if not already, the crucial market globally for other countries. So, China's situation is becoming the bellwether for other economies as well. So everyone or most countries have a major interest and stake in what happens to the Chinese economy.
Interesting. We'll be keeping a close eye on what other levers Beijing might be pulling as the year progresses. Martin Jacques in London, thank you as always.